For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Over the past several weeks, both retail investors and everyday consumers have had to navigate a highly uncertain economic environment. A combination of fluctuating tariff policies, a tense and ongoing trade conflict with China, and stubborn inflationary pressures has led to mounting anxiety regarding the possibility of a looming recession. These economic stressors have cast a shadow over global financial markets, creating volatility that has made it difficult for even the most seasoned investors to predict the near-term outlook. The instability in financial markets reached a boiling point, ultimately triggering a market correction. A correction refers to a decline of at least 10% in the broader indices from recent highs and often signals growing unease among investors. However, that narrative shifted dramatically this week thanks to two major developments that offered a much-needed sense of relief and optimism. The first catalyst for this week's dramatic market turnaround came in the form of political news from Washington. On Wednesday, the Trump administration made a surprising announcement: there would be a 90-day suspension on the implementation of most new tariffs. This pause was introduced to create room for diplomatic negotiations with 75 countries in hopes of easing escalating trade tensions. Market participants viewed this development as a highly constructive move, interpreting it as a step back from the brink of a full-scale trade war. The mere possibility that a peaceful resolution could be reached sparked a broad-based rally across several market sectors. Artificial intelligence and semiconductor stocks were among the biggest beneficiaries of this wave of positive sentiment. Despite the optimism surrounding the tariff pause, there was still some tension bubbling under the surface. On the same day the 90-day delay was announced, President Donald Trump moved to increase tariffs on Chinese goods to an aggressive 125%, effective immediately. In his statement, the president cited what he described as a lack of respect from China toward global economic norms. Fortunately, the news cycle also brought a second piece of good news that helped bolster investor confidence. The latest inflation report, released by the United States Bureau of Labor Statistics, showed that inflationary pressures had moderated somewhat during the previous month. For consumers and investors alike who have been feeling the sting of rising prices, this was a welcome development. According to the report, the Consumer Price Index, the most closely followed indicator of inflation, rose by 2.4% in March when compared to the same month 1 year earlier. In addition to the year-over-year improvement, prices on a month-over-month basis actually declined by 0.1%. This marked a rare deflationary shift and came in below economists' expectations. Analysts had been anticipating a year-over-year increase of 2.6% and a month-over-month rise of 0.1%. Core inflation, which excludes the more volatile categories of food and energy, was up by 2.8% compared to the same month last year and increased by just 0.1% on a monthly basis. This represented the lowest rate of core inflation observed in more than 4 years. While the Federal Reserve continues to pursue its long-term goal of maintaining inflation at 2%, the most recent figures suggest that progress is finally being made and that the worst of the inflation crisis may be in the rearview mirror. In company-specific developments, there was also a major reversal regarding Nvidia, a key player in the artificial intelligence hardware space. The Trump administration announced that it would no longer pursue an export ban on Nvidia's H20 chip. This specialized processor had been developed with U.S. trade compliance in mind, specifically tailored to meet existing restrictions for sales to customers in China. The decision to drop the ban followed a private meeting between President Trump and Nvidia's chief executive officer, Jensen Huang. During the discussion, Huang reportedly made a firm commitment to significantly expand Nvidia's investment in data centers located within the United States, a pledge that appeared to help sway the administration's stance. This policy reversal was particularly significant given the broader context of the artificial intelligence revolution, which is now in full swing. The push to integrate artificial intelligence into mainstream business and consumer applications has led to an explosive increase in demand for cutting-edge semiconductors and high-performance computing systems. To meet this demand, some of the world's largest technology companies are expected to collectively spend an estimated $315 billion in capital expenditures in the year 2025. A substantial portion of this investment is earmarked for the servers, chips, and data centers required to power next-generation artificial intelligence applications. However, not all is smooth sailing. The ongoing tariff uncertainties still pose a significant risk to the artificial intelligence ecosystem. The proposed tariff increases would apply to to many of the components and materials used in constructing data centers and other supporting infrastructure for artificial intelligence. Because a large portion of these materials is sourced from countries affected by the higher tariffs, the added costs could slow down the rapid adoption of artificial intelligence technologies. If component prices rise significantly, businesses may scale back their plans to integrate artificial intelligence into their operations. Despite these potential headwinds, several key companies have found themselves well positioned to thrive in this era of technological transformation. Palantir Technologies, Nvidia, Broadcom, and ARM Holdings are among the top beneficiaries of this long-term trend. Each of these companies brings unique strengths to the table, from providing core chips and processors to delivering highly specialized artificial intelligence solutions. Palantir and ARM Holdings are currently trading at higher valuation levels, with their shares priced at 154 times and 49 times forward earnings, respectively. These valuations reflect investor confidence in their future growth potential, although some may consider them expensive at current levels. By contrast, Nvidia and Broadcom appear more reasonably priced, trading at 26 times and 23 times forward earnings. These valuation multiples are relatively low when compared to their historical averages, making them appealing options for value-conscious investors seeking exposure to the artificial intelligence sector. Given their leading positions and the expected growth in artificial intelligence-driven demand, these companies represent compelling opportunities in a market that is rapidly evolving. In summary, economic uncertainty driven by fluctuating tariffs, tense trade relations with China, and persistent inflation led to fears of a recession and triggered a market correction. However, a market rebound was sparked by two key developments: a 90-day suspension of new tariffs by the Trump administration to allow trade negotiations with 75 countries, and a positive inflation report showing signs of cooling prices. Artificial intelligence and semiconductor stocks benefited significantly, with companies like Palantir Technologies, Nvidia, Broadcom, and ARM Holdings seeing substantial gains. Meanwhile, Nvidia also secured a major win after the administration reversed plans to ban exports of its H20 chip, following a commitment to invest heavily in US-based data centers. As major technology firms plan to invest over $315 billion into artificial intelligence infrastructure in 2025, concerns linger that proposed tariffs could raise costs for essential components, potentially slowing AI adoption. Nonetheless, Nvidia and Broadcom now present attractive valuations, offering investors a rare opportunity to buy into leading artificial intelligence players at a relative discount. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.